If you're trying to decide between the Greek and Italian golden visa programs, then you've come to the right place. By the end of this video, you'll know exactly how each process works. We'll look at what the permit actually gives you, what your investment is likely to earn, what the risks are, and how the tax rules look for each country. We're also going to cover the full pathway to an EU passport and look at who should actually avoid both of these programs and what you should do instead. I'm going through every factor that matters to the decision, so let's get started. The Greece versus Italy question tends to get framed as a lifestyle choice. Which country do you prefer? But the more important questions are structural. How the application works, what you're committing, what the permit delivers, and whether or not your goal is achievable through either of these programs at all. In this video, we treat the decision as what it is, a financial and legal commitment that ranges from 250,000 euros on the low end to several million, depending on the route, the country, and whether you're bringing your family with you. It deserves a clear look at every relevant factor. And one thing I want to flag up front is that after we've been through both programs factor by factor, there's one group of investors for whom neither Greece or Italy is the right answer. And it comes down to what your goal actually is and what each program can and can't deliver against it. I'll come back to that group, who they are and what they should be doing instead, after we've covered all of the ground. So let's start by looking at how each program works, because the sequence of steps is what determines where the capital risk actually sits. So in Greece, the investment part comes first. You identify the property, negotiate, sign the purchase contract, and transfer the funds. The transaction closes, and then you file the application for the residence permit. If your application runs into problems like documents being queried, processing delays, or anything like that, your capital is already in the country and it's tied to the asset, and to a certain extent, it's outside your control. The law does require the Greek authorities to issue the permit within 2 months of receiving a complete file, but in practice, processing backlogs have pushed the real-world timelines quite far beyond that. Industry sources reported average wait times of 14 to 18 months throughout 2025, which have come down from highs of 18 months as authorities work to clear a significant backlog. Now, Italy works in the opposite direction. Before you commit a single euro of capital, you apply to the Investor Visa Committee for something called the nulla osta, which is a government pre-approval of your application and your investment plan. The committee reviews your file, approving or rejecting it, and only after receiving the nulla osta do you apply for your entry visa at the Italian consulate. And then when you enter Italy, you have 3 months to complete the actual investment. So the benefit here is that the government approves your file before you move any money. And I haven't seen that sequence anywhere in any other European golden visa programs that exist at the moment. It's quite unique. The nulla osta process typically takes around 25 to 35 days. And the total timeline from your initial application to having your residence permit in hand is typically 3 to 6 months. Now, for any investor who's comparing these two programs on risk, this is the biggest, most important structural difference. To reiterate, in Greece, your capital is at risk from the moment you commit it, before you even know if you're going to get accepted for the visa or not. But in Italy, you commit the capital only after you know the outcome. But that process is only one dimension in the decision-making process here. So let's look at what you're actually putting your money into in both of these cases. So these two programs take very different approaches to what counts as a qualifying investment. Greece is primarily a real estate program. The investment thresholds depend on whereabouts in the country you're buying. So Zone A covers the region of Attica, including all of Athens and surrounding municipalities, Thessaloniki, Mykonos, Santorini, and all the islands with a population above 3,100 people. The minimum investment there is now 800,000 euros. Then we have Zone B, which covers everywhere else in Greece with a minimum of 400,000 euros. And in both of these zones, the investment must go into a single property with a minimum area of 120 square meters. It's not possible to split it across two smaller properties to meet the threshold. Now, there are two exceptions worth keeping in mind. These are at a threshold of 250,000 euros. Commercial or industrial buildings converted to residential use, where the conversion must be completed before you file your application. And there's also listed heritage buildings that require full restoration to be completed before your first renewal. And both of these options are available anywhere in Greece, regardless of zone, and there's no minimum floor area requirement. So while they're quite difficult to find, and I do recommend you speaking to an advisor specializing in Greece, this could be an affordable option to get into the Greece Golden Visa. Now, there's one condition that can change the return calculation significantly for many investors. Properties for the Greek Golden Visa are now prohibited from short-term rental. Platforms covering stays under 60 days are explicitly banned, like Airbnb. And if you use your property in this way, you risk a penalty of losing your residence permit. So that old model of buying a property in a tourist area and covering the costs through Airbnb income is now gone. And that happened in the 2024 legislation. Now, in contrast, Italy does not have any real estate investment route. Instead, it was designed to direct productive capital into the Italian economy rather than encouraging passive property holdings. And here are the 4 routes for the Italy Golden Visa. First off, we have €250,000 for the innovative startup route, 500,000 in equity instruments of a company that's based in and operating in Italy, which means shares or corporate bonds, €1,000,000 in philanthropic donations to public interest projects, and then finally €2,000,000 in Italian government bonds with a minimum holding period of 2 years. Now, although the startup route is the cheapest, it carries the most risk of the 4 options, typically because you're taking a direct equity stake in an early stage company. Now, we've done a recent interview with Arieti Capital, which is a firm that's built a fund structure that gives you access to the €250,000 startup threshold, but with a lower risk profile. So if that startup route in Italy does interest you, you can check out that video, which I've linked in the description. Now, both programs require you to maintain qualifying investment for as long as you hold the permit. If you sell the property in Greece, then your permit is at risk. If you liquidate the fund in Italy, then the permit is also at risk. But that permit itself has a day-to-day reality that goes beyond the investment conditions. Next up, let's look at what each program actually gives you in terms of benefits. First off, neither one gives you permanent residency right off the bat. Greece issues a 5-year renewable residency permit, and Italy issues a 2-year permit, which you can renew for 3-year periods after that. Both of these are temporary residence permits, and they're still conditional on maintaining the qualifying investment. But permanent residency in both countries does become available after 5 years of continuous legal residence. Now, both programs give you Schengen access, which means free movement across the Schengen zone for the whole duration of your permit, and neither one has a minimum stay requirement to maintain the permit. You can live elsewhere altogether and just renew every 5 years in Greece or every 2 to 3 years in Italy, provided you maintain the investment. Family members are included under both programs. In Greece, that covers your spouse, your children up to the age of 21, and the parents of both the investor and the spouse. In Italy, it covers the spouse, your minor children, any dependent adult children, and dependent parents. In terms of work rights, the 2 programs differ quite meaningfully. The Greek Golden Visa explicitly includes employment. So you can be a shareholder in a Greek company, you can hold equity and attend board meetings, but you can't perform actual work for it. The Italian investor permit does allow you to work and do business in Italy. So if you're an investor who wants that flexibility as an option, then this is an important distinction between the 2. Both Greece and Italy do permit dual citizenship, so you wouldn't have to give up your existing passport for either one. But one caveat for US citizen investors that applies to both countries is that moving your legal residency to Greece or Italy is not going to change your US federal tax obligations, because the US taxes your worldwide income no matter where you live. So anyone using either program as part of a US tax strategy needs to seek specialist advice before proceeding, and nothing in this video is tax advice. But there's a dimension of this investment that most people want to know about before they commit to it, and that is, what does it have the potential to actually earn? Let's look at that next. In Greece, the long-term rental income is the primary return mechanism for Golden Visa properties because, as I mentioned earlier, the short-term rental route is now closed. So let's look at a few example figures here just to get a general idea. The gross rental yields across Athens are averaging at approximately 5% as of early 26. That's based on Global Property Guide data. And after operating costs, property management fees, let's say 8 to 12% of the rent, and the annual property tax, you're looking at net yields in Athens in the low to mid 3% range. In premium areas like the Zone A ones, where the €800,000 threshold applies, gross yields compress to around 3 to 4% because prices have risen faster than rents. In Zone B, properties at the €400,000 threshold in regional towns, smaller islands, and mainland areas outside Attica, these can deliver higher gross yields, typically 5.5% in well-chosen locations. And Zone B comes with lower entry costs and in many cases a higher income yield. It also comes with lower liquidity and fewer exit options if you want to sell, so be sure to keep that in mind. Capital appreciation has been pretty strong across Greek property in recent years. For example, Athens residential prices rose approximately 9% year on year through 2025. But whether that trajectory is going to continue is a question for a specialist in Greek real estate. It's a bit beyond the scope of a visa comparison video. Keep in mind that transaction costs are another part of the picture that can really matter. buying Greek real estate typically adds 5 to 8% on top of the purchase price. For example, 3% property transfer tax plus notarial, legal, and registration fees of roughly 2 to 3%, plus any agent fees where applicable. So you have to recover that cost before net returns can begin. Now, in terms of Italy, the return available strongly depends on the investment route. Italian government bonds are currently yielding approximately 3.5% to 4% on a 10-year basis, and that's based on trading economics data as of May 2026. If you're going to go for the €2 million route, that is a predictable, liquid, low-maintenance return without any of the property management obligations. Also in Italy, the company equity and funds route sit between passive and active. Returns here obviously depend on the performance of the underlying businesses, and they will vary vastly by fund strategy and sector. The startup route does carry the most risk and the most upside potential, but it should be treated as a venture stake and not as a yield instrument. Now, Italy's €2 million BTP route delivers a predictable market yield in a liquid instrument, and Greece's 800,000 Zone A property delivers a lower net yield with illiquidity and management overhead, but it does offer capital appreciation potential and a physical asset. So different propositions for different portfolio priorities, and that's obviously something you have to make your own decision on, keeping in mind that nothing in this video is investment advice, and you should always consult with a qualified financial advisor before deciding to invest capital. Now, there's another dimension to the financial picture that a lot of investors haven't fully thought about. Let's talk about the tax treatment now. Both Italy and Greece offer special tax regimes, and these are separate from the Golden Visa programs themselves. You can only access them by becoming a tax resident of the country, which means that everything in this section of the video is only relevant to you if you're considering physical relocation or if you're on the citizenship track, which also requires you to actually live in Greece or Italy. So in Greece, qualifying individuals who transfer their tax residency to Greece can pay a flat lump sum of €100,000 per year on all foreign source income, regardless of the actual income earned. And this regime runs for up to 15 years. You can also include family members like your spouse, children, and parents. To access the regime, there's an investment requirement of €500,000 in Greek assets. So, for example, a Zone A Golden Visa property at €800,000 would satisfy this, but a Zone B property at €400,000 would not satisfy it without adding a supplementary investment. And also important, you must also not have been resident in Greece for tax purposes for 7 of the previous 8 years. Now, Italy's equivalent regime covers individuals who transfer their tax residency to Italy and haven't been an Italian tax resident for at least 9 of the previous 10 years. So the flat tax on all foreign source income is $300,000 per year for anyone who enters this regime from January 2026 onwards. So next up, let's talk about another very important factor for many people, and that is the EU citizenship pathway. Okay, this one is an important conundrum. So both of these programs do offer a path to EU citizenship, but the qualifying conditions to be eligible for citizenship make that inaccessible to most of the investors currently using them. Let me explain what I mean, looking at Greece first of all. Now, in Greece, the citizenship clock starts when you register yourself as a physical resident of Greece at least 183 days a year. Holding the Golden Visa while living elsewhere doesn't move the clock at all. So you have to be physically in Greece full-time to start this clock. You need to hold Greek residency for 7 years at least before you can apply. And that qualifying period requires 183 days of physical presence each year. And total absences across the full period shouldn't exceed 10 months. You also need to pass the Greek exam, which covers Greek language at B1 level, along with history, geography, and civics. Now, after submission, the application processing typically takes another 2 to 4 years in practice, depending on the region and the workload. The statutory maximum is actually 36 months, with extensions possible in complex cases, but there's a big backlog at the moment. And Greece does allow dual citizenship. Now, for Italy, the timeline's a bit longer. It is 10 years of continuous legal residence. The physical presence requirements are basically the same as Greece's. And Italy's quite strict on this. You can't just maintain a registered address, and they do check up on this. Now, the process requires B1 Italian language certificate from an accredited institution, but there's no separate civics exam in this case. Once again, application processing is currently running between 2 to 4 years, again because of a backlog. And just like Greece, Italy does permit dual citizenship. Given these restrictions, the vast majority of Golden Visa investors just use the permits as residency footholds. They choose to continue living elsewhere, they maintain the investment, and they renew the permit to give them Schengen access and, greater options. They never bother to start the citizenship clock because it does require uprooting your whole life and moving to Greece or Italy. But if you're an investor who actually wants to relocate and live there full time, then citizenship is achievable with the requisite timelines and the language exams. But yeah, if you're not moving to Greece or Italy, citizenship is off the table for both. And now that brings us to the investors whose primary goal with all this is an EU passport and whose plan doesn't include physically relocating to get it. Now, there's just one program remaining in the EU that still answers that question. Let's take a quick look at what that program is and how it works. So here's a decision framework based on everything that we've covered so far. You should choose Greece if your primary goal is to have a physical European asset with EU residency attached to it. You want a property you can use, visit, rent out long term, and sell later independently of your immigration status. You're comfortable committing capital before your visa is approved, and you have substantial enough foreign income that the tax regime is advantageous if you do choose to relocate. And you're not depending on short-term rental income to offset any of the holding costs. Now, you should consider Italy if your primary goal is capital-efficient EU residency with that all-important pre-approval risk protection. You want Schengen access and EU residency, but you want to commit capital only after you know the outcome. And as a bonus, you want to have work rights as part of the package if you ever do decide to live in Italy. But if your primary goal is EU citizenship and you're not planning to physically relocate, then you should skip both Greece and Italy. There's only one remaining program in Europe that answers that question, and that is Portugal. Portugal is the only golden visa in Europe where the citizenship clock still accrues without physical relocation, with a minimum stay requirement that works out as just 7 days per year. Applying for citizenship also requires a language certificate, currently at A2, but it may go up in the future, which is a lower bar than the B1 level required for Greece and Italy. And importantly, as of May 2026, so a very recent change, Portugal has doubled its citizenship timeline for most non-EU nationals. They've extended it to 10 years under a newly passed law, which has doubled it from 5 years previously. Now, I'm not going to sugarcoat it. Portugal, and especially the Golden Visa program, has real challenges. Most significantly, the processing backlog, which is one of the biggest of any active program in Europe. Waiting times are hitting almost 40 months, according to IMI Daily's July 2025 data. And okay, the government has committed to clearing the backlog in 2026, but you should absolutely talk to an advisor and verify the current position before going into this. In Portugal, investment routes start at €250,000 for the cultural donation route. Keep in mind that there's no returns available on this route. And the most common route that people choose now is €500,000 in Portuguese investment funds. Portugal no longer has a direct real estate option. They got rid of that in 2023. Portugal's extended citizenship timeline, combined with this huge backlog and the new investment constraints, do make the Golden Visa program a fair bit harder to justify than it was just a couple of years ago. But if you're an investor whose primary goal is to eventually attain EU citizenship without ever relocating, Portugal remains the only option available. But those challenges are real and they should definitely be part of the calculation. So to sum up, if your goal is an EU property asset with residency attached, Greece is the right choice and zone selection is the main decision you should work through with an advisor. If your goal is capital-efficient EU residency with pre-approval risk protection, then Italy is the stronger choice. And if your goal is eventual EU citizenship without relocation, then the only conversation to have is about Portugal. Don't treat the investment as a visa cost. It's a capital allocation that needs to make sense independently of any residency or citizenship benefit. So if you found this video useful, please like it and subscribe because it helps more potential investors find this content. And if you want deeper analysis on residency and citizenship strategy, then please feel free to join the Digital Emigre newsletter, which is linked in the description. Thanks so much for watching, and I'll see you in the next one.